Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending September 29th, 2017. Just a quick summation of where we are for the week and also for the month of September. For the week, December corn is 3 cents higher, November beans down 18, wheat down a penny. On the monthly, going back to the close on August 31st, December corn is down 1 penny for the entire month. Beans up 21 cents, wheat up 15. So as far as the grains, we continue to be in a very range-bound, choppy market on a day-to-day basis, seeing where we go. Other markets, livestock market has improved a little bit in the last month. Energy's improved in the last month. The dollar index continues to trade in that 92, 93 area, and the S&P and the stock market continue to make moves towards all-time highs. Harvest is off to a pretty good start in most areas, led by beans at this time. In fact, we're seeing bean harvest in areas where typically corn harvest is pretty prevalent for this time frame. It's old cliche, but so far it seems like the yields are surprisingly good, especially for soybeans considering the late summer weather. Most have been very happy in regards to yields thus far in most areas. We'll see how that plays out in the balance of the harvest. But in regards to that, I think most analysts now are assuming that the yields both on corn and beans are going to be fairly close to where the USDA's numbers are. Obviously, future reports will give us more indication on that. The key thing that's happened in the grain markets over the last couple of weeks is a huge break in soybean basis. Again this week, soybean basis in most of the Midwest is down anywhere from 5 to 30 plus cents for the week, and this is after being down hard last week. So most basis levels in beans right now are running 20 to 40 cents below the 5-year average. Corn, somewhat similar. Corn basis down, maybe steady down a nickel this week, and they're running 15 to 30 cents below the 5-year average. Now, interestingly enough, is when you look at exports, right now corn has been disappointing thus far. Obviously, the USDA is looking for a smaller corn export number this year. Beans, on the other side, bean sales, even though they're lagging last year's numbers, we've had some very good announcement weeks, mainly out of the Chinese market, and the USDA is looking for another record export year this year. But given that, and given how basis is trading right now, part of that is keep the southern crop. Southern U.S. crop is very big. That's supplying a lot of the export trade right now. Also, Brazil's still very competitive in the world market. But interestingly enough, with a huge increase in barge freight or transportation costs this week, or the last 2-3 weeks on the river system because of low water, which we'll see how long that lasts, has had some impact on transportation costs. But we've seen that transportation costs offset by higher CIF levels on corn, which we don't have a lot of exports on, but have not seen that on soybeans, which is kind of interesting. And no doubt bean demand is going to be good this year the way it sounds. But right now, right here, right now, in the middle of bean harvest, we're not seeing much of that. Thus, we're seeing huge cash carries in the bean market, which presumably means the producer is going to store a fair amount of his beans now, waiting for better levels, better basis, or better cash markets in the deferreds. In some cases, this could have some impact on logistics as beans end up taking corn storage space in some locations. So more on that as we go down the line. Livestock market, fairly quiet trade this week. Cattle continues to be in a fairly choppy trade. Same with the hogs, only with a little more violent or volatile swings on a week-to-week basis. There's a seasonality for February cattle to firm up during the month of October, last 15 years. Kind of have that in mind. But all in all, in summary, early part of harvest, yields have been pretty good thus far. Basis levels are very weak. If you need some thoughts or you want to discuss what are your options as far as handling this week basis and how you can maybe take advantage of better opportunities down the road, feel free to give us a call here at the office. And the grains, even though we had a nice bounce today off the quarterly stocks report, those numbers came in. The corn at 2.295 billion bushels, about 50 billion below what the average trade guess was. Beans, pretty surprising number there, 301 million. Average trade guess was 338. Presumably those numbers will show up in the next S&D as far as carryout for the 2016-2017 crop, offsetting the friendly quarterly numbers on the beans and the corn was wheat production, especially spring wheat being larger than the trade thought. Thus we had, as far as on today, Friday, we had a pretty negative wheat market, but very positive day in the beans and also somewhat of a positive day on the corn. With that, if you have any questions on these commodities, feel free to give us a call at BIS Commodities. Phone number is 800-373-2525. And with that, everyone have a very nice weekend.